Australia's largest financial institutions, once strongholds of fossil fuel financing, are now on the brink of a green revolution. The Commonwealth Bank, previously criticized for its heavy fossil fuel investments, has made a bold decision that could transform the financial landscape. This move demands attention and might trigger a global shift in banking practices. But is this a genuine effort to save the planet, or just another corporate ploy? Let's explore the seismic changes shaking the financial world. A surprising U-turn. Commonwealth Bank embraces climate goals. In a surprising twist that left both environmentalists and industry insiders gobsmacked, the Commonwealth Bank, Australia's largest lender, announced that it would stop financing fossil fuel companies that don't comply with the Paris Agreement's climate goals. This is not just a minor policy adjustment, it's a complete 180 for a bank that once stood as one of the biggest financial backers of fossil fuels. To put this in perspective, the bank's fossil fuel lending in 2018 was a staggering $4 billion. However, in just 2 short years, this figure plummeted to a mere $267 million. The dramatic shift is a testament to the growing pressure on corporations to align with global climate goals. But can this pivot be sustained, or is it just a flash in the pan? Only time will tell if CBA's newfound commitment will stand the test of time and scrutiny. A win for climate activists, but is it enough? Climate activists who have long rallied against the financial sector's complicity in climate destruction finally have something to celebrate. Commonwealth Bank's recent announcement marks a significant victory after years of relentless campaigning. Yet, while this may seem like a win, it's essential to ask, is it enough? The bank's pledge to halt financing for non-compliant fossil fuel companies is undoubtedly a step in the right direction. But skeptics argue that it may not be sufficient to counteract decades of environmental damage. The question remains, will this move inspire real, lasting change across the industry, or will it simply serve as a convenient PR maneuver in a world increasingly aware of corporate greenwashing? The numbers don't lie, from billions to mere millions. When it comes to Commonwealth Bank's dramatic reduction in fossil fuel lending, the numbers speak for themselves. In 2018, the bank was lending a jaw-dropping $4 billion to fossil fuel projects, solidifying its reputation as a major player in the industry. Fast forward to 2022, and that number has nosedived to just $267 million, a 92% reduction that is nothing short of astonishing. This shift reflects not only a change in the bank's financial strategy, but also a growing recognition of the risks associated with fossil fuel investments. With the world moving towards cleaner energy, CBBA's decision to slash its fossil fuel lending sends a clear message. The future of finance is green. However, the road ahead is filled with challenges, as other banks and financial institutions are still lagging in their commitments. Not just about coal, oil and gas in the crosshairs. While coal has long been the focal point of climate-related financial decisions, CBBA's new policy broadens its scope to include oil and gas companies. The bank is committed to having its exposure to these industries and will no longer finance businesses that lack credible plans to reduce emissions by 2025. This move is a major blow to fossil fuel companies that have relied on easy access to capital for their expansion plans. But it also raises the stakes for the entire financial sector, as CBA's decision sets a new benchmark for environmental responsibility. The broader implication is clear. If other banks don't step up and match CBA's commitment, they'd risk being left behind in a rapidly evolving market where sustainability is becoming a key driver of financial success. Independent assessors, the new gatekeepers of finance. One of the most intriguing aspects of Commonwealth Bank's new policy is its reliance on independent assessors to evaluate the climate transition plans of companies seeking financing. This adds a crucial layer of accountability, ensuring that only those with genuine science-backed strategies to cut emissions get the green light. By setting up these new gatekeepers, CBA is not only protecting its own interests, but also pushing the broader financial industry towards greater transparency and responsibility. This move could set a new standard across the sector, making it harder for companies to get away with vague promises and greenwashing. The implications are far-reaching, as other banks and financial institutions may soon feel compelled to adopt similar practices to stay competitive and credible in the eyes of increasingly climate-conscious investors and consumers. Shareholder pressure, the invisible hand guiding the bank. In the world of finance, money talks, and behind every major corporate decision, there's usually a powerful force at play: shareholders. In the case of Commonwealth Bank's shift away from fossil fuel financing, pressure from shareholders has been a significant factor. With increasing awareness of climate risks and the potential for stranded assets, shareholders are no longer content with just profits. They want to see their investments contribute to a sustainable future, and CBA's decision reflects this growing trend. The bank's move to align with the Paris Agreement's climate goals is not just a moral choice, it's a strategic one, designed to appease shareholders who are demanding more responsible investment practices. This shift could influence shareholder expectations across the financial sector, pushing other banks to adopt similar policies or risk losing investor confidence. Risks and opportunities, the double-edged sword of climate action. Commonwealth Bank's decision to pivot away from fossil fuel financing is as much about managing risks as it is about embracing opportunities. The bank has significant exposure to climate-related risks, particularly in its insurance business, where it has $30 billion in home loans vulnerable to cyclones, floods, and other natural disasters exacerbated by climate change. By cutting ties with fossil fuel companies, CBA is reducing its exposure to these risks while also positioning itself as a leader in sustainable finance. However, this strategy is not without its challenges. The bank must navigate the complex world of climate regulations, investor expectations, and market dynamics. If done right, CBA could set a new standard for sustainable finance, not just in Australia, but globally. But the stakes are high, and the path forward is anything but straightforward. The domino effect. Will other banks follow? Commonwealth Bank's bold move has undoubtedly set a new standard in the financial sector, but it begs the question: will other banks follow? So far, Australia's other big banks ANZ, NAB, and Westpac have not shown the same level of commitment to the Paris Agreement's climate goals. However, with CBA setting the bar, the pressure is on for these banks to step up or risk falling behind in a market that is increasingly valuing sustainability over short-term profits. The financial sector is at a crossroads, and the decisions made in the coming months could have far-reaching implications for the future of finance and the global effort to combat climate change. The domino effect is real, and it's only a matter of time before other banks are forced to choose between staying competitive and staying complacent. A global implication. The world is watching. The significance of Commonwealth Bank's decision extends far beyond Australia's borders. It has global implications. As one of the largest banks in the world, CBA's actions send a strong message to the international community. The financial sector must take climate change seriously or risk being left behind. If a financial giant like CBA can make this shift, what's stopping others? This could be the catalyst needed to push global banks towards more sustainable practices. The world is watching, and the pressure on financial institutions to align with climate goals has never been greater. Whether this leads to a global shift in banking practices or remains an isolated case will depend on how other institutions respond in the coming months. That's all for today's video. If you found this breakdown of Commonwealth Bank's major shift as fascinating as we did, don't forget to give this video a thumbs up. Your support helps us bring more insightful content to you. And if you want to stay updated on the latest in financial and environmental news, make sure to hit that subscribe button and ring the notification bell. Thanks for watching, and we'll see you in the next video.